Well, joining us now is Marcus Bogdan, who's the fund manager for the Switzer Dividend Growth Fund. And we always like to focus on stocks that pay dividends, and we'll kick off on that. But I also want to ask him, what is the one stock in the portfolio that he thinks has a real growth potential? Marcus, thanks for joining us.
Terrific, Peter. Good to be here.
So what are you seeing now, and how is it influencing the way you invest in the fund?
Well, at the moment, we're seeing signs of slowing earnings per share growth, slowing economic growth at a time when we've got rising inflation and rising bond yields. So that suggests to me that we need to be defensively positioned in the portfolios with companies that have got pricing power, and also a tilt towards those companies where there are acute shortages, such as energy. And we express that through our holdings in both Amcor and Santos that have done particularly well over the last month or so.
Those two stocks, do they pay dividends, or are they primarily a growth part of the fund?
No, they do pay. They do pay dividends, and Amcor has had the ability previously to have off-market buybacks, and they also have significant franking credits that are expected to be released to investors over the forecast period. Okay.
Looking at what's going on in the Australian economy, and your stocks are primarily local stocks, what is your expectation about dividends over the course of this financial year? Are they going to keep on rising?
Yes, I think they are, because earnings growth, which is incredibly important for dividend growth, has come back from around 15% to 10%, but it's still positive. And I think the companies that we are focusing on are those companies that will be able to continue to grow their earnings. Companies such as Amcor, Brambles, Wesfarmers, Woolworths. The expectation is that we'll be able to continue to see further growth in dividends over the course of the next year.
Now, I know you can't be certain about this, but what's your approximate guess of what the collective dividend yield will be for the fund over this year?
Well, I think we can manage a dividend yield of well over 4%, maybe 4.5% for the portfolio, and we believe that that the dividends from the companies that we own are sustainable and they will grow over time.
So anyone who's in the fund then might be expecting a return around 4 plus franking credits?
Correct. Yes.
Right. Now, as we primarily talk about with you, because you're in a sense a specialist in picking stocks that pay dividends, but the fund is a growth fund as well. So I want you to tell us, what stock in the fund do you think has the best upside growth potential?
Well, we do like Amcor in the portfolio. The company has demonstrated that it can grow its total return of over 10% per annum, and that is a stated target for the company, and that is broken up into capital growth in terms of earnings per share growth, dividend growth, and they've also initiated each year a substantial buyback as well. So we think that the profile there for earnings growth is sound, and that will be supported by also very good dividend growth.
Sorry, Marcus.
And it's also important to state that what we would classify Amcor is a defensive industrial company. It is a global company, but it supplies its products mostly into the consumer staples market. And so there is a level of stability there. And there's also, importantly, as prices are rising, the ability for Amcor to pass through those raw material costs to the end producer.
Yeah. For people who don't really know much about Amcor, can you just give us a brief history of the company? And also, explain to us if they're advantaged by the fact that because of the coronavirus, a lot more people are going to be buying online than ever before. And is that going to be like a structural plus to Amcor's future?
Well, the irony is that people are buying more, and packaging has become even more important in terms of protecting the safety of the goods that are being delivered to customers. And so Amcor is one of the largest packaging companies in the world, and it has both rigid and flexible packaging, and the areas that it is mostly focused on is the consumer goods area, but it also does a significant amount of packaging for the healthcare sector, both in materials going into hospitals and having them to be sealed appropriately, and also into the pharmaceutical industry as well. So it's at the higher end in terms of the sophistication of packaging, and that gives it its global competitive advantage.
Great stuff, Marcus. Thanks for joining us.
Thank you, Peter. Cheers.